Hey guys, how you doing? This is gonna be a quick recording of Backtest Fridays episode 7, as there isn't really much for me to talk about because everything we spoke about in the last episode played out to the exact T. The exact T. So the title of the last episode was actually Will the US dollar bulls return to the market? And indeed, they did return to the market with the absolutely clean rejection of the base of this channel, with the market pushing back to the upside. Like, that's literally all the market did this week, right? So, as I always speak about it, if the DXY is going up, Euro is going down, GBP is going down, and AUD is going down. And that's pretty much what happened throughout the entire week, right? So the DXY did indeed reject this level, right? So with the DXY rejecting that level, over on Euro, we had Euro rejecting its level of resistance. All of this area was a level of resistance for Euro, right? How to capitalize on the sells? The market actually gave us pure opportunities across all pairs this week. They gave us double taps. Most pairs, well, most US dollar pairs gave us a double tap. Like, let me draw it out for you. One tap, middle, top, fall, right? GBP USD, remember the hint from last week, played out to the exact T. Anybody took that bagged about 152 pips, but it's the same principle. Top, pull back, top, fall. Same with Australian dollar. Top, pull back, top, fall. All of this happened as a result of the DXY, which is the US dollar, simply just rejecting this area. So how could we actually capitalize on all of these now? So we see the movements. How do we enter the trades, right? So for starters, with Euro, let me clean up this for a second. Too much stuff on the charts. Clean charts are happy charts. Let's start over. So from our daily, we know that Euro is going to reject this area with DXY rejecting the base of the channel, right? So going to the low time frame, it has to identify exactly where the resistance is within the market. So our resistance is actually up here, right? Get the wicks. The wicks are where the happy stuff happens, right? So we have some form of trend line indication along right here also. Get that nice and clean. Nothing in the market happens by random. Accuracy is very important. Boom. Point A, point B, point C, point D. It broke it at point E and gave us this beautiful engulfing right along this area. Capturing that opportunity, sells right at the end of that engulfing would give us about would be about 104 pips in profit right now. So we could have entered the trade immediately after the engulfing. Stops above this level of resistance that's right here. Well, I'd use a 25 to 30 pip stop loss, but you could put your stops above this level of resistance. But to keep on the safe side, just roll out your 30 pip stop loss, right? And as I always say, if we're selling, we're looking for the market to take out the next immediate major level of support and push even lower, right? So with Euro being sold from this area, we're looking for it to take out, let me get this out of the way. We're looking for it to take out this level of support right along this area and push to even lows. So we're looking to take Euro all the way down there for 180 pips, right? Simple, easy, break up trend line, retest with that engulfing, fall to the downside. Situation on GBP, JPY, we actually had a triple top rejection of this zone, right? Go to the low time frame. Let's see what we see on the 1 hourly. We had a trend line situation with GBP USD also, but it was a very steep trend line. Nothing you really want to be dabbling with, even though it's perfect retest and push to the low side. But off the 1 hour level, we had a beautiful break of low time frame support, which led to sellers coming into the market right off this level. So we have this level of support that was broken, carrier line right across, and off this level of support we had two entry opportunities, two engulfings within the markets. Let me delete this so you can see exactly what I'm talking about. So the market established some form of level of support on the low time frame, maintaining the push to the upside, but that level of support was tested once, rejected, tested twice and rejected, but finally the bulls could not hold up the seller momentum, and we had this nice bearish variation opening the sells in the market with another confirmation for sells within the market along that area. So we had two sell opportunities right there. So we'll make our entries. It's a GBP pair, so run out 45 pip stop loss, 40 to 45, and then we look to take out the most immediate level of support. So we'll go back to a higher time frame and we'll find where our support is within that region. So within this region, the major level of support that we had to take out to go to the downside is actually here. But this doesn't make sense as a trader. You're risking one to get one. That's not very good risk management. So this personally is not the trade I would be looking to take, right? So the market, we had it pushing all the way down to 140, where is it? About 150 pips. This is more like, this is a better trade opportunity right here, right? But our first take profit, we'd have to take this level into consideration. So yeah, you'd get your first take profit. You probably come out somewhere along here when you see the transition and the market starting to push back to the upside. But we could have bagged about 40 plus pips right there. But the market did come back to give you another opportunity to get into the market with the same exact transition that happened on the low time frame in this area, repeating itself on the other area. So let's go to the low time frame and identify it again. All right. So off the bat in this area, we had the market establish a level of support. Let's get rid of this. We had the market establish this level of support. It kind of looks choppy, so let's go down to a lower time frame to get a better vision. Let's see what's going on within this area. All right. So we had the market take out this level of support, and all it did was just return to the known level of resistance within the market, and the sellers took control. Entry off of this engulfing candle is a valid sell all day of the week. Like, you run out your 40 pip stop loss, 40 to 45 pip stop losses. Like, you're entering immediately on the roof right here. You should not have any risk as a matter of fact, right? Go to the H4. And we'll have to take into consideration the same level that we rejected right here as our take profit one. And then hopefully that level breaks so we can push to a new level, which would be down here. That's the ultimate aim. But we have to take into consideration, hold on, whoopsie, technical difficulties. We have to take into consideration this level, this level, and then our ultimate take profit at this level, which the market literally tapped before market close. So all of these were take profits. You could have a take profit 1, take profit 2, take profit 3. But there was also another entry on the 1 hour time frame when the market took out this level of support right here. It's like a little trend line, a rising trend line situation right here. Point A, point B, point C, the market broke it, retested as past support acting as future resistance. Could have gotten another entry right off this area, right off the engulfing scene in that area. Entries to the low side, stops above our level of resistance. Can roll out your 45 pip stop loss if you want to work with that same risk management. And we're still looking to take this trade all the way to the south side. So you could have gotten 2 trades off this area. One trade for 166 pips and another trade for, what's this? 93 pips. So let's jump in our calculator. 163, well, 166 plus 93. So for this little total, for this little 160 pip region, we could have extracted 260 pips out of the market by capitalizing on both those entry opportunities, right? So GBP was melting this week. Over to GBP JPY, it's a similar situation with this level over here acting as past support and being rejected as future levels of resistance. Like the exact same entry procedures that are just broke down in GBP USD is the exact same reasons you can took to short the market with GBP JPY. As remember, the JPY is kind of correlated to the US dollar, so if you're shorting USD JPY, you should be shorting US dollar. I mean, you should be shorting GBP USD at the same time. Like they both move in the same direction, and put them up side by side, and you can observe that for yourselves, right? Let's put this on the 4-hour and this on the 4-hour also, right? I will see. Last week they had the market moving to the upside. Last week the market moved to the upside. Sorry, 2 weeks ago the market moved to the upside. Market moved to the upside. Then last week the market rejected this level of resistance and moved to the downside. Reject this level of resistance, move to the downside. See? Similar pairs. Like even if you zoom way out, you can see it's the same movement. You have all these squigglies up here, bag of squigglies up here, rejection right here, rejection right here, big push to the low right here, big push to the low right here. Like, take note of them simple little things there. Those are the little aspects within the market that help you to become a very good trader, right? So, same story on AUD US dollar, level of resistance, double top, push to the downside. Like, there's this week, last week, yeah, because it's a new week now. Last week was very simple. No overcomplicated trading. You don't have to be out here trying to find reasons why, oh, the more your knowledge you know is the better of a trader you are. No, like this trade was just, you have a level of resistance on your daily right here. So the market came to that level of resistance and the market absolutely just rejected the level of resistance. Not rocket science. Buy low, sell high, guys. That's the name of the game, and we ain't in this to be out here losing money. So for this week, looking forward, there's a lot of sellers momentum within the market. So I can anticipate momentum following through, pushing to the downside. But we can't just look on Aussie for make that decision. Taking the DXY into consideration, we're actually at a lower time frame level of resistance right here, because this was a level of past support, now potentially acting as future resistance. But in terms of the daily flow of the DXY, I can see it pushing back up to highs within the probably the next 2 weeks. But for the week to 2 weeks, but for this week, I don't really have a lot of information, as I have to see how the market reacts to this era, because the market can actually open with another engulfing candle, creating a tested area right here for the market to continue pushing to the downside. But we need to take these levels of support into consideration. So maybe probably have a slight pullback to this area and then continue pushing to the upside. That's the most favorable result. And if you look at it, it kind of does create an inverted head and shoulders of some sort if you really meds it. But when it comes to trading, guys, don't try to predict the market. Just see what the market does and react to the market. If you keep a bias, you're not going to be a very good trader, because you'll stick to one time frame. One mindset, and the market is doing an opposite thing, and you're just like, hey, it's going to go up, hey, it's going to go up, but no, it's actually going down. So be objective when you trade what you see, what you think, and I hope everybody have a good week. As I said, this is going to be a little short episode, because like we really covered a lot of what I anticipated to happen in last week's episode. So big up on yourself, and yes, guys, the US dollar bulls did return.